Welcome to On the Move. This is Chris Blasi. I'm joined again tonight with my regular co-host, Rich Checkan, and tonight we have a special guest, Matt Carr. We're going to be covering a host of topics that are really hot, and anyone in the financial space and the investment world is constantly being asked to share their opinions on that. And what we're talking about specifically is we're going to address the election cycle and what that means to you as an investor. We're also going to talk about the recession, right? This has been forecast for the last 10 years. And the tempo polling for this recession is really just increasing. So we're going to ask Rich and our guest Matt, and I'm going to chime in on where we think we are in the recession, or is there a recession on its way? We'll also talk a little bit about 2019, kind of a recap and what worked and maybe what didn't work. And of course, what everyone is always most interested in, what is the opinion of myself, Rich, and our guest about 2020? How is it going to impact investors? What is our forecast? And what do we think the best course of action to take as far as safeguarding and growing your money? So to kick things off, I'm going to introduce you to, again, Rich. Many of you know him from our past episodes. Rich has been with Asset Strategies International out of Rockville, Maryland since 1996. He is currently the president and COO. Rich is a prolific writer, speaker. He's a subject matter expert on things pertaining to the precious metals market and even beyond. And he's been a frequent guest at investor conferences around the world. And just as an interesting aside, Rich is a graduate of the U.S. Military Academy at West Point and did serve as an officer in the U.S. Armed Services. So Rich, one other thing. At the end of our show, we always have a Q&A period. And we did get a number of questions submitted prior to the show, but we encourage all of you, be vocal. There's a submit button, ask anything, any question you have. All questions are of interest to us and of course the other guests. So again, I encourage you to submit your questions. Rich, welcome tonight.
All right, thanks, Chris, and welcome everybody. Thanks for attending. Welcome, Matt. Chris, I think the folks who have attended past webinars know Chris very well. He is the author of the Great Reset Opportunity Report and the founder and owner of Neptune Global Holdings. He invented, patented the PMC ounce, which those who have read our newsletter, kept up with us over the past several years, know that we're big fans of this quad metal product that offers gold, silver, platinum, and palladium in a very user-friendly format. So he's got a proprietary mix of all four metals. So the performance is outstanding since inception over 10 years ago. And it's one of the ways to get palladium in that portfolio. And we'll talk about palladium a little bit later, I'm pretty sure. Always an honor to be with Chris on the air. He's been on every, talk show you can think of, the alphabet soups. He's written for them as well. And I think you'll see why he's so much in demand as we continue on. We have with us tonight, I'm very honored, special guest, Matthew Carr. He is the, let me get this right, Matt. He's the chief trend strategist for the Oxford Club. And I was telling Matt, he writes too many things. He is the editor for Profit Trends, Strategic Trends Investor, the Viper Alert, Dynamic Fortunes, and Trailblazer Pro. Matt's been with the Oxford Club, nearly 2 decades now?
Been with the Oxford Club for about a little, 1 decade. Exactly. My anniversary was just this month.
Sorry, he's been doing research and analysis for a couple decades, but he's been with the club for about a decade, and he has the distinction of holding the number 1 return pick, if you will, from all of the Oxford Club's advisors over the years, and it's over 2,300% in about 4 or 5 months. Not bad. That's okay, I guess. So Matt, as you get to know him, I think you'll see there's a lot more to him than just digging through books and articles and trying to figure out the next thing, even in substance. And I think Matt, welcome.
Thank you. Thanks for having me.
All right. So first up on the list tonight, we're going to talk about the election cycles. we're about 1 year out. Don't look now. And already things are in full swing. If you ask me, they've been in full swing for about 2 years already by now. I think we had a field of 20 about that far back ago for the Democratic nomination, and looks like still just one for the Republican nomination. But we're about a year out, and things will be heating up over this next year. So the big question to throw out there, and I guess I'll start with Matt, is with 1 year to go to the elections, how generally do election cycles affect the markets, or do they? What sort of impact do they have?
So I've got my start as a trend investor, so I do follow trends, and the U.S. presidential election cycle is actually very interesting, and it's something that has been followed since about 1950. During that stretch, what you found is that the odd numbered years, first and third, are good years, and your even number years, the second and the fourth year of the election cycle, tend to be a little bit softer. So what we found is throughout history that the third year of a presidential election cycle, that's where they're trying to do everything that they can to keep the economy running, to make sure that they have as much, dry powder available going into an election year. Tends to be the best for stocks. So you're talking about a 16.5% average gain for the S&P 500 since 1950. This year, we're setting new records. We're up a little bit more than that. So that has been just a very strong trend to bank on. Now, going into the election year, a little bit softer. You have a high probability of success rate since 1950. It's only the market has only ended down twice, and two of the worst ones would have been 2000 and 2008. Those big drops that we had.
Yeah, of course, those aren't really anything to do with the presidential cycle, the elections, the debate. That was about dot-com bust, and that was about the Great Recession. What are your thoughts, Chris?
So I think, and this is my feeling on everything overall, there's been so many precedents that have been broken in all aspects of investing.
Well put.
The whole idea of in the world of stocks, fundamental investing died 10 years ago.
Right.
So many things have been breached that 10 years ago, there was proclamations of certain debt levels were reached. The whole world would come to an end. The consumer was pronounced dead how many times in the last 10 years? So there's an amazing, remarkable way of things just keep hobbling on. There are so many things that are happening that are different. The polarization is striking in the country. I would kind of maybe want to look at specific even years, like maybe back in the 60s when there was more social turmoil, like 1968 and such, as maybe a better example of when you have this kind of turmoil. So I'm not an expert in this. I would defer to someone more like Matt, who has studied the histories in this. From my perspective, I just see there's one thing that is true, and I think this is always true, is the old house divided is not good, right? And the digging into the heels, the polarization, the animosity, that's a genie that isn't quickly or easily put back in the bottle. So I know that's more of a cultural view than necessarily the markets, and markets always continue to defy a lot of fundamental things. So I know the market is really powering higher now, and from policy that's being that the Fed is using, and I don't know how long they'll continue to support that policy, and I don't know what's going on behind the scenes. I could speculate, but I won't share those on the air. So what I do think is there's a good chance of this melt up going into the election, over the next year. I think the market is actually probably going to do quite well. Now, after that, I'm not quite sure. So I guess I could my opinion, next 12 months out, probably will be very positive for the market. I'm referring to the equities market.
Okay, yeah, and historically, like I said, your presidential election cycle, none of the years are bad years for the market. You're talking about a 6 to 7% average gain
It's a degree of good,
Right, right. It's a degree of good between on first, second, and fourth. Third year is just the one year that is always really, 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 really positive. Like I said, because everything's going in. The second year is somewhat muted because you do have that midterm election and that always ends up being like a referendum on whoever's in the White House, whether it's a Democrat or a Republican. They're going to lose the most seats in the House during those midterm elections. I do agree with you, though, that it's very tough now as a trend trader because there are so many things that have kind of been broken at this point in terms of just kind of the social interaction. Like, the thought that, moderation is dead. Moderates are dead. It's now two extremes. And so that's why I think next year you could have a little bit of a really rocky start for the markets because it's not just we're not just talking about, like, let's say the difference between Elizabeth Warren and Trump, but the difference between Elizabeth Warren and Joe Biden. Those are huge, huge, huge differences, and they're pulling each of their parties. The right is being pulled to the right, the left is being pulled to the left, and there's always an argument you're not conservative enough, you're not progressive enough. So I think that adds a lot of uncertainty, a lot of volatility.
Yeah, I think Chris hit an important point. The fact that the interest rates are so low. I mean, they were raising them, and we've talked about this before. I'm still convinced the only reason they were raising rates, they didn't really have the stated reasons to do so. They were doing it just because they wanted to be able to pull them back if they needed to. And now it looks like before they even need to, they're doing it anyway. So as long as that money remains cheap and easy, all boats are going to rise in this ocean. And we're seeing that across all asset classes. Basically anything with a price tag on it is going up in value. So I think that trend will continue. I think that helps that wealth effect. I don't know if it's really wealth. It's just how we're defining it. And the only other thing I would say about, the upcoming election year, if you want to kind of take a look at things, and we'll get more into this later, is, kind of had the impact when, Trump was elected, President Trump was elected, and he was talking about ramping up infrastructure and everything and how that had the bump in the market. So take a look at, where things are polling and what they're talking about, what their platforms are, where they're going to be putting the money when and if they get in power. And that might be something to buy the rumor, sell the news type thing. Yeah,
100%. That would be something where I would definitely buy the rumor, sell the news, because we have seen some of, again, going back to that presidential cycle, a lot of the downturn is because of whether those campaign promises were being met or kept, or if they were actually ever achieved. And that's always the toughest thing.
So that said, I think that's going to segue into our next, because the forecast of a recession falls right into the election cycle, and they say people vote their pocketbook. So, as I said before, not to be redundant, I agree. We've heard about the so-called recession for the last 10 years. And the tapped out consumer manages always to add a little more debt to keep spending. And, we have obviously some unprecedented things like student loan debt that is just, the rate of default is greater than those ninja mortgages and those subprime mortgages way back in 2008.
Subprime auto now.
Yeah, and that supposedly kicked off the crash of 2008. Now we have, between student loans and subprime auto, far higher default rates. But so with that being said, I'm gonna have a little fun with you guys. I'll start with our guest. Matt, what's your position on the talk about being imminent?
Well, I think you take it from two different angles. The stock market now obviously is showing that it does not believe a recession is imminent. We've now rocketed to these new all-time highs. It's kind of funny. I sometimes go back to talk about how bad the fourth quarter started, like those first days of October where we had that big sell-off. That is all completely forgotten. Now we're focusing on these higher highs. And I think what you brought up before in terms of recession is the Fed. we're in a very kind of strange environment to me that we have unemployment at a 50-year low. You have inflation right near these key levels for the Fed, and then we're now going back, cutting rates. They're increasing their balance sheet. So I don't know what that is really telling me. As I know sometimes the job numbers can be a little bit of a lagging indicator, but personally, I don't believe a recession is that imminent. I think you can look at the global economies, see the headwinds that exist there, but the market at the moment is believing that the Fed is going to be able to steer and navigate some sort of soft landing through not QE, right? We're not doing quantitative easing. We're doing something that's very similar to quantitative easing, but like it. So I don't believe that there's a recession in 2020. Whether it's down the road, that's something that could originate in China instead.
Rich.
Well, Matt alludes to the fact that the quarter started off poorly. It looked like, here's the big one. If you guys remember Sanford and Sons, I'm going to date myself here. It's like, I'm coming, Elizabeth. It's the big one. That changed. And I think what's changed here recently is the rumor that we're going to have some sort of settlement on the trade war. Right. Yep. Even if it's not a total settlement, it's going to be a partial settlement. And just on the hope or the thought or the tweet that that's going to happen, everything turns around and it's rosy again. And it tells me that greed is very much alive. And that's what happens at the top of the market. Greed rules. Fear has not taken over. Here is our world as precious metals dealers. We don't sell it, but I can tell you we benefit from it. Greed is really something that drives the stock market. People are looking to continue to make the gains. Unemployment figures are low, the lowest we've seen, in pretty much forever, since they started keeping track of the numbers. So that's an indicator that a recession is not on the way. You've got, if you look at what might trigger a recession, could be a stock market collapse, could be some sort of a trade war or escalation of the trade war, could be geopolitical crisis. None of those things are really at play right now, assuming that Trump and Xi can get together. The geopolitical crisis used to be something that would move markets. And we talked about this before, Chris. I don't think it moves anything anymore. I think people are so numb to everything going on around them in the world, it really has zero impact on the markets, or near zero. So I tend to agree. We're not in a recession. It doesn't look like we're going there anytime soon. It will come. It always comes. Nothing moves up in a straight line forever, but I just don't see it on the short horizon.
Yeah, and I also believe that, like any sort of bear market, that for the most part is going to be short. I go back to the first major piece of investing advice I ever received back when I was doing oil, natural gas, uranium, and gold. We were in this really bearish period. Markets sold off, and I was like, well, do we go out and we tell our people, like, hey, start selling, panic. And I was told, pull up a historic chart of the S&P 500, right? Find me all those devastating days throughout its history on there. We can't find them. They're blips. The market ultimately only moves in one direction, and I don't really fear recessions that much anymore. I kind of look at those as any sort of big market pullback as a major opportunity.
I think it's a good point. Good point. Right.
Have your cash ready, your powder dry?
Yeah.
So, your thoughts, Chris?
Yeah, I think what I just said, Matt has a good point, because all this hand wringing, they have to come, and it doesn't necessarily needs to be tremendously long in duration. I mean, you could spend more time fretting and worrying about something that, it's going to come along. Just position yourself right, and it'll be over. It's not going to be something that's going to, drag on for years and years and years. Not like. So.
Go ahead, Matt.
I was going to say, I've argued that the bull market that we've been in since 2009, or at those lows in 2008, has actually died twice. We just we just kind of we forget about we forget about like these big 19.9 or 20% drops that took place, and there was like this reset, just like over almost exactly a year ago, where everybody was panicking the world was going to end. It had a big massive sell-off, back up to new highs.
And there is a lot of money looking for a home, right? One of the big, I mean, unfortunately, it's not evenly, spread about amongst investors, but there is a lot of money looking to invest itself.
Yes.
So,
Yeah, I think that was on the front page of either the Financial Times or the Wall Street Journal today. They were talking about how much cash is sitting ready to pounce in investors' hands right now. So that's an indicator that greed is still very much alive and they're looking for more opportunity.
yeah, and I'll submit, if it wasn't so difficult for investors to find a place to park money, probably things like WeWork wouldn't have been as followed as they were, and there wouldn't have been as many people believing there was any validity to that, and it would have been discounted a long time ago. And maybe the Ubers and the Lyfts would have also, taken a hit earlier, but it's literally, you're just kind of forcing the money. So, especially any viable organization is probably pretty safe, with this.
Yeah. Well, I just want to wrap up on one of the points you said, just to kind of drive it home. It doesn't look like anybody here is worried about a recession. And I think, Chris, you hit it on the head. If you stay invested, stay diversified, maintain your allocations, and again, I'll emphasize stay diversified, you really don't fear such things. We've long said, we talk about the three-legged stool. Don't have all your assets in any one country, any one currency, or in any one asset class or investment. And as long as you can spread it out, you don't need, well, you may need, I don't know, but you typically don't need some sort of trust down in Nevis or something like that to protect your assets. What you need is a diversified portfolio that can weather different storms and whatever the world throw at you. So,
spot on.
Moving on, we're going to take a little look back here before we start looking forward. And I'll just toss it up. I'm not sure who wants to jump in first, but we're not done yet with 2019, but thus far in 2019, what's done well? Who's the big winners? And if you have any thoughts as to why.
Well, all right, I'll kick it off. I will stick to what I'm a little more focused on, which is the precious metals. And of course, we're on, I guess, we're basically on what as you'll call the 10-yard line, right? We got a little bit more to go. I mean, let's not rush it, almost 2 months. But the big winner, I'll say, from my world is the same one that's been doing tremendously well for the last 3 years, and that's palladium. This metal, which later on maybe we'll talk about one way that we allow investors to participate in this, is one of the precious metals that is very much overlooked. Very few people have a position in it. This is an essential metal. And I just got to hold this up. I don't know if anyone can kind of see this.
Perfect.
2019, as of basically today, yesterday, 44%. It's up. And there's investments that have one good year, right? And then of course they give it all back and more. And not to say that palladium isn't volatile over long periods of time, it is. But there are some very unique fundamentals that are supporting this metal. And I just have to share that since 2016, here's another very high-tech chart I put out for you guys. What is that? Up 450%. So,
all right, we're getting closer to Matt's world at 2,300%. But
well, he threw down the gauntlet with that 2,300. I had to come back with a little bit of a win. So from our perspective, focusing on the metals, palladium has been doing tremendously well. Great 2019. We look at all four metals in our organization. Silver's really been the big laggard the last few years. Very disappointing because a lot of people who are very focused on the metals have taken big positions waiting for silver, and I believe it will have its day. So just hold tight. But so that's just my looking back at 2019 and what I saw as one of the big winners.
Gotcha. What about you, Matt?
2019. Excuse me. Sorry, I've got a little bit of a cold. I thought 2019, the big surprise for me was Xerox. To think about, here's a company that has almost doubled already this year. That was a big surpriser to me. Look at Apple being that big charger on the Dow. We're heading right into prime season for iPhone sales that holiday season. I think that's pretty huge. And then companies like Cody with their gained 13.5% today. We're looking at another double on that for this year. And then it's been like some really interesting stuff. Even though, let's say, cannabis, which has had one of the bloodiest bear markets in its history, falling more than 50% from its highs, you do have companies in that space like Innovative Industrial Properties, which is a REIT, the only pure marijuana play that pays a dividend. Now, it has come back. I did close out a triple-digit gain earlier this year and another portfolio, but it is still up 70% for the year. So I think that's been very, very interesting for me, especially with that cannabis space having so much hype going into this year, and then early part of the year being very, very, very strong. And this last month or so have been so devastating, so difficult, with big, massive pullbacks. And then finally, I'll say a company that I think that just win once again in terms of just a long-term strategy. I like Disney. This streaming war. I think Disney is really positioning itself well. It has the Marvel franchise. It has a Star Wars franchise. We're heading into the holiday season, which is again the annual release of the new Star Wars movie. And so that'll be good for them, as well as their theme park, the streaming service, which launches next week. So I think that's a company that just won in terms of longevity.
Gotcha. Well, I know, Chris, talking about silver as a laggard, I'll just touch on that quickly. What I'm happy about with silver is it's doing what it always does. Okay, so it was lagging considerably behind gold when gold set the trend and broke out. Initially we saw pretty good gains in gold, and silver was just kind of plodding along like nothing ever happened. But if you close your eyes, turn around, and look back now on November 6th, I think gold's up, 16% on the year. Silver's up about 14, 15% on the year. They're not far behind. So gold or silver has caught up. So I'm encouraged by what it always has done, it is doing. And if that plays out going forward, we should look ahead for silver to eventually outpace gold, not tomorrow, but toward the end of what we believe is a new bull market. For me, I can't explain it. I'm not an expert on it, but for me, the big winner this year was Bitcoin. I hate to say that four-letter word as a gold dealer, but it's it went up to 20,000. Dropped back down to virtually nothing. Started the year at a little over $3,000, and today it's trading about 9,300. So it's up 144% this year, and it's not something that I invest in. I'll be honest with you, because I don't invest in things I don't understand. I can't put my finger on it. Can't wrap my head around it. I'm not that good of a mathematician. To me, it remains a speculation, and speculators are being rewarded, and I think some speculators are being punished. But it had a pretty good year again.
And I'll say, going back to, we can even tie this back into the presidential cycle, next year will be the halving for Bitcoin rewards. And so that usually is a big boost for the price. And I do trade Bitcoin, and one of my favorite vehicles to do that with is Grayscale.
Gotcha.
Okay.
I was going to say, before we go there, because I think I know where you're going, Chris, just kind of throw this in. Anything just off the top of your head is a big loser last year? I know we didn't,
So since I'm not going to comment on things outside the precious metal space, I really believe, especially, my position is that the precious metals, using gold as, we'll say the proxy for all, began the secular bull market in 2002. It's a classic. The pattern is really classic. It ran from 2002, we're talking gold now, up until 2011, 2012. Did a textbook 50% retracement, turned on a dime in December of 2015.
Yep.
And since 2016, gold has been moving higher. So within the metals, platinum has been, not doing so well, but it's starting to perk up. Silver is starting to perk up. So in the precious metal space, I would say there isn't a real loser of 2019, right? Nothing crashed. It wasn't like
We're just not seeing enough. I think if
well, it wasn't silver circa 2012 where it literally just collapsed. So, there's some things that are, a couple that are treading water, like platinum and, silver to a degree, but no tremendous losers in our space.
I can't argue that. What about you, Matt? Any losers out there?
I never have any losers. No, I will go back to, again, probably the biggest loser of this year for most investors was that cannabis space, because there was a lot of those companies out of Canada, which are that leading edge, reported so many losses that just kept getting larger and larger. And then you had a number of scandals, let's say like the CanTrust scandal, where it was a legally growing product in 5 rooms, loses its license. That set off like a bomb in the sector. Exo, which is another big company, Canada, missed on earnings with true guidance. And Canopy Growth, the biggest player in the market, kicked out their CEO. So that has been the biggest pullback, and that is one of my focuses is the cannabis sector. So the Canadian market is down 64% from its 52-week highs to its 52-week lows, and we're right around there. And those companies fell to levels that they haven't been since 2017, since before that big Canadian legalization last year in 2018. I do think, though, that there's a little bit more upside there because of Cannabis 2.0 legalization earlier in October, on October 17th, which legalized the derivatives. That's beverages, capsules, tinctures, topicals, edibles, all that kind of stuff. Those are all higher margin products. So all of those licensed producers in Canada can actually now begin to really make money. That they've spent the last 2 years building up their inventory, ramping up production, but have been stuck selling their lowest margin product. So for me, I think that the cannabis was probably the biggest loser at this point, just because of the less back in the market. And then, of course, we could talk about all the unicorn type codes.
Exo.
So we're going to come back to you, Matt, and with the old saying, that's great, 2019, but what do you have for me today? What is the most valuable thing that we can all share, or I think what people are always most interested in? What is your forecast for 2020?
For 2020, going back to kind of like our earlier conversation, I do see it being kind of a rocky road because of this divided and sort of fractured sort of political environment in the United States. I think that's going to lead to a lot of volatility, a lot of uncertainty. The markets really don't like uncertainty. That's a real positive for precious metals because it becomes that safe haven. So I do like gold going into next year, into the next couple of years, because I think there will be some uncertainty. But I do think we're looking at a volatile 2020, at least until the election, and then you're going to kind of figure out who wins, what that means for the markets, and then we usually see a rally after that. Now, for sectors, I will still say I like 5G. That's been a very positive sector. We're going to start seeing that rollout take speed over the next year. This is a market that's looking to be $250 billion by 2025. Pretty sizable market. There's a lot of interesting small and large players in there. And then going back to cannabis, because we are at these lows at this point, it's kind of like we're at this bottom. There has to be more upside from here. They've gone down, and all of these higher margin products are going to start hitting the shelves in December and in early 2020. that will start making that turnaround in the expenditure, especially on the Canadian side. The U.S., multi-state operators, I do think we start seeing some sort of change at the federal level, whether that's the passage of the Safe Banking Act, which would allow cannabis companies access to banking measures that traditional companies are allowed to have, or some sort of legalization at the federal level, or some sort of like rollout. I believe eventually, medical cannabis gets legalized at the federal level first, because an easy thing for patients and allowed for research. I believe that will be going forward. Then I always like things like digital payments. Like I said, 5G, which is a big thing for all of the fourth industrial revolution, AI, autonomous vehicles, electric power grids, like that stuff. That's what I'm looking for in the year. All those sort of markets.
Rich, your thoughts?
Well, I agree with Matt. I think, and I don't think it's going to just be a rocky start in 2020. I think we're already seeing it. What I've noticed this past year is, virtually all markets are very, very sentiment driven, right? So to me, that means they're all looking for direction, confirmation, something. It's uncertain is what it tells me. So, wherever the markets think they're going to have some sort of benefit, they're going to start running in that direction. That being said, I think we'll see more of that next year, and it'll be magnified. You're gonna have a lot more exposure with all these candidates in the election year, so a lot more things are going to come up, get batted around. People are going to take it on the chin, deal with it, punch somebody else in the face. So the markets will react to all of those sound bites and all that theater, if you will. The impeachment proceedings are not going away. You read one column one day and they say, well, there's nothing there, it's going away. And then you read the next column and say, President Trump is absolutely done, he should just leave now. So that's going to continue to go back and forth, have an impact on markets. The trade war is a big one. I think there's no way that we're going to close the divide between China and the U.S. and solve everything completely, specifically upper issues that they're off to later. But, getting a little bit closer, actually talking to each other and doing something, even if it's small, is important. And that's going to give some life to the market. They're probably going to continue to boom as a result of that. All that being said, we're in a bull market in precious metals. That's my world. That's what I understand. I'm with you, Chris. I think we're going to see that continue. I don't see it being a moonshot. I think we could even pull back even a little further from where we are now, just below 1,500, just because we moved up through it so quickly. Now, there's no resistance. We've talked about this from about 1,400 to 1,900, but it doesn't mean that we're not going to backtrack and backfill along the way, right? So you've got to fill behind the run up. And I think that's going to happen in fits and spurts all throughout the year, and it'll take these little sound bites to pull back and do so. But I continue to see gold moving up. I continue to see silver moving up and eventually outpacing. I don't know how much further palladium's going. I'm not going to bet against it because it's been going up for years now. It's the best performing precious metal period over the past decade. And it's one of the reasons, you may not mention it, Chris, but your PMC ounce is doing so well is that palladium component to it when everybody else is just looking at gold and silver. I do expect silver to start moving ahead and outpacing gold, probably not next year, but maybe. I am encouraged to see the gold silver ratio starting to come down, although as I speak, it's back up to nearly 85, with this pullback, but it was 90 something, so I think we're going the right direction. I think just positive, but it's going to be fits and starts, I think, all year. And I still think all boats are being risen or raised by the rising tide of modern monetary theory.
So I'll just chime in. To Matt's point, the threat of having a choppier, more divided, a lot of hostilities, and the turmoil that comes with that obviously is a little additional wind to the back of the precious metals, right? There's fundamentals that are driving them higher. That could just be kind of a little turbo boost. When I talked about this long-term secular bull market, we entered what, from my perspective, this third leg, which the secular bull market has 3 legs. The third leg always gives the biggest return and eventually ends in a parabolic blow-off. I don't see that parabolic blow-off happening next year, but I see it as another good year for the metals, even if it does have an interim pullback. So once you're in that third leg, the trend is up, and I think that's where they are. Now, as far as the platinum palladium play or palladium, since it's done so well, it's only 1.75% of physical composition of the PMC ounce, but that has powered it. There's really been a benefit to the PMC ounce. The one offset is if palladium just kind of holds its ground or even gives a little, it'll probably be because platinum is coming in. And what it means is maybe manufacturers that are going to substitute palladium with platinum. So now
we're nearly 2 to 1 right now.
Well, yeah, the price is the disparate is so great. You would have expected this to happen by now. This happened way back in like 1991, where palladium got ahead of platinum, and then platinum kind of took some of the market share back. So it's quite surprising that it's, as you just said, it's almost double in price, and it still hasn't closed that gap. Now, it's not easy to just retool a factory overnight, right? When you're building a product and using palladium, it's not that type of substitution. There's a lot more to it. And there is one thing they both share. They both are more rare than gold and silver, and they both predominantly come out of Russia and South Africa. So it's not like
very stable places.
You switch to a substitute for palladium and have a much more reliable source or safe source. It still has that same risk. So
Gotcha.
again, but because the PMC ounce is diversified, it was designed and it's done it, and it mathematically has proved to do it through things like the Sortino ratio, which is a formula that fund managers will use. It is designed to give a better risk-adjusted return, and it has, and it probably will continue to do so. So from our perspective, it's always safer to take that, a little more diversified position. I would never encourage going all in on one of the metals. Now, on other things, I do think about some other things besides precious metals. To a point Matt made about cannabis, I think one of the challenges or one of the things that are going to determine with also the cryptos is legislation. Now, without using a name, only because this firm has actually approached us about offering it on our platform, one of the major household name broker clearing brokers is waiting to come out with a trading the top 5 cryptos on their platform institutionally, not to their retail customers. And their big offer is that, we hear about the crypto stolen from these exchanges and such. Well, their offering is going to be, they're basically going to safeguard all your crypto storage. So this is a household name. This is, one of the biggest players. But the only reason they don't move forward, they're all teed up, is they can't get a clear they can't get anything clear from Congress about what the reporting is going to be, all those regulatory issues. Now, like cannabis, I think, there's that similarity. If Congress gets together, if the regulators decide that they can at least give you some clear guidelines, you'll probably see interest in those, the Bitcoin and a few of the top tier cryptos ramp up, especially once you get a big name behind it, basically saying, we could store it in cold, it's going to be safe. And I think that would be a big boom. So getting off the metals for a second, that's what I see as of interest going forward.
I think you also need to see a big shakeout in the number of cryptocurrencies. That's always my big complaint. There's almost 5 times as many cryptocurrencies as there are publicly traded cannabis stocks.
Oh yeah, and this company I'm talking about, they're only dealing in the top 5. They have no interest in all those ones, right? So it's the obvious, the top ones. But it's just interesting that an organization like the one I'm referring to is actually developed a whole platform around it and that gives credibility to what they see the future is for these digital currencies.
Well, I actually believe the blockchain technology is very, very interesting and very, very useful. We saw Coca-Cola and SAP launch a deal for blockchain for supply management. And I think that would be, those are sort of the deals that you're going to see going forward. Like these big companies with expansive supply chain adopting blockchain to help them.
Gotcha. I've long thought that the best part of Bitcoin was the blockchain technology, and what other industries, as they all try to go peer to peer. What other industries do with blockchain, I think, is what the real exciting part of this was. And I actually had a conversation with Andy over at the Oxford Club, your crypto guy, and this is like 2-3 years ago, and he said, Bitcoin is never going away. And I'm going to paraphrase him, don't quote me. But he said, because Bitcoin will be forever linked to the blockchain, that it just can't go away. It's the foundation.
Yeah, I very much believe that.
Yeah. So, no other thoughts? We'll move to some questions at this point. The first one up, getting back to the political end of things. So let me see, this is from Scott in Wyoming. He said, what has historically been the best mix of Senate, House, and executive branches for the markets? Any thoughts? Is there one?
Well, we cover this every 4 years, and it's always interesting. Democrats in the White House has always been the best for the stock market. And it's not even close in terms of like average gains. I think
that's like average 10% to almost 2%.
It's like the total return during a Democratic tenure is like something like 57% versus 16%.
Yeah.
Now, of course, Republicans are held back by Hoover, Nixon, George Walker Bush or Bush 1. Those were all bad years. But conversely, you always want to have a Republican Senate. Same thing. There's a Republican-controlled Congress. The average gains there are vastly different. Something like 3 to 5% versus 17 to 19%. And generally, that's kind of the mix that you definitely want to see, and what naturally sort of forms, because no one's going to come in that often and control both the White House, control both houses of Congress, and then just push through everything. They're going to lose some of that probably in the second year. So,
anything to add, or I think you covered that pretty well.
No, I don't. I haven't studied, who is actually in control of one of the three branches. I mean, the White House or the Congress. Looking at stock returns, so it's not.
Yeah, and I tend to think that the market forces are much more important than who's sitting in the White House and or what composition we have. I think and I'd have to do a little more digging, but I think the best mix is probably something where there is a check and a balance, as opposed to somebody who's got unrestrained carte blanche to do whatever they want. I think that's the country thrives on compromise, which honestly is what really bothers me about the current discourse right now, that nobody knows how to compromise. Nobody knows how to have a disagreement and walk away without one slit down its throats. That's a concern right
now. Now, not that it's actionable advice, but one thing is, they've managed to convince most of the public that the barometer of the health of the economy is the stock market, but that's not necessarily so. I mean, stock market has been powering ahead, and there's plenty of statistics about the real growth of average earnings over the periods when the stock market's done well, which are completely in the polar opposite. I mean, personal debt, personal bankruptcy, all in the face of a rising stock market. It's not an indictment on anything. It's just saying that they're really kind of two different things. stock market do quite well when the average household is suffering or really going sideways to down. So, it's a little bit misleading, but unfortunately, it seemed, they've got most people believing that is the barometer for the economy.
Yeah, and Trump is more focused on the stock market than any other president we've ever had in the White House. So that is something that kind of put out there every single day.
Well, I would say he's doing that because he's leveraging the fact that everyone before him, the financial media, every administration I'll say media have convinced people. Doesn't matter that your income isn't doing that great. The economy's great. Look at the stock market. Now they've managed to convince people that of that. So I think what Trump is just doing is saying, "Hey, you created this belief, so I'm going to focus on it if it's going up, and that's going to be that should be the measuring stick of how I'm doing economically, right?"
Yeah, I forgot who said it, but the quote, "It's the economy, stupid," or something like that. That's what it's all about. The wealth effect, if you will. Kind of sticking with the political theme, we may have touched on this a little bit already, but questions in. What impact do we think the impeachment hearings are going to have on markets in general, gold, et cetera? I think we covered this a little bit. Anybody want to wrap it up?
Yeah, I can just kind of jump in and say, I can just give the stock guy perspective. From the markets, we do know that, Nixon and Clinton, those both had pullbacks during those impeachments and those investigations. We also know that there are other underlying things going on as well. The OPEC oil crisis for Nixon, the long-term capital sort of implosion for Clinton. So impeachment, I feel like, has been on the table for
before he was elected.
Before he was elected,
it was.
I mean, I don't.
That's when the plans were set in motion. So
yeah,
I don't want to sound flippant, but I feel like pretty much it's been like an everyday thing that everybody's got acclimated to it. So regardless of what outcome, I think we're all kind of in tune to this conversation.
I just think it's going to continue the political divide. It's just going to make the two sides harden their positions, and it's not going to be helpful in any way, shape, or form. Because one of the things that are kind of a driver for things like gold is uncertainty and political instability.
Should benefit the metals market.
It's not going to hurt gold, continuing to pursue this. So,
agreed. All right. Well, Joe from Illinois says, listen, the doomsayers say recession has been right around the corner forever. What gives, basically? It hasn't happened. I think we've already addressed this. We all talked about the recession issue and said, listen, none of us see it anywhere near on the horizon. I remember going to a conference, and I won't say the name, but a very, very well-known speaker on this subject was up there, and he said, listen, he goes, I don't know why you're here listening to me. He goes, I've been calling for recession for 40 years, and it hasn't happened yet. He goes, I don't know what the hell you're here for, to listen to me talk. So, it's always out there, and I think everybody's always going to think, okay, where's the next danger, if you will, even when times are good. It's just natural, I think, as humans to be looking ahead and trying to figure out where the pitfalls are. And markets will correct. We always know that. And there are things we can look at as indicators that they're coming, but I don't see any of them out there right now.
Yeah, I always say, like, perma bears, like those kind of guys that have been like calling for a collapse for decades, they only need to be right once, and then they live off of that for the rest of their lives. As somebody who is optimistic and has to be moderate and sort of bullish all the time, I have to be correct pretty regularly. If I was only right once every decade, it'd be hard to imagine I'd still have a job. But that's kind of like the perma bear position.
And I agree. I mean, way back, this is really you have to know your history. Guys like Joe Granville, remember back in the day? They made their one call, and next thing you know, they're doing the whole Tonight Show circuit and all that, and they never made a correct call forever in the rest of their lives. People will build a career off of one call. The other thing I will disagree with, especially because this is more prevalent in the precious metals world, the people that believe that, well, you only invest in precious metals and they're only going to serve you if everything collapses, right? Of course, that's not true, right? It continues to go up. I mean, currencies get debased. The dollar's purchasing power has been diminishing for over 100 years. So that's not a collapse. I also say, one other thing, of course, there's a lot of people that buy precious metals, and again, using gold as the proxy, and they say they can't wait. They believe gold's going to go hit $5,000, right? And it may at some point, but I also say be careful what you ask for. I mean, if it was to be $5,000 in the next 12, 18 months, that's probably not going to be really good for our daily lives. I'd rather see gold grind higher at a nice 8, 10, 12% over a long period of time than one of those dramatic events that some people are forecasting, where we wake up in the middle of the night, check our screen, and it's at $3,000, $5,000. Because what that's going to mean is problems of a magnitude that, whether you own gold or not, it's still going to impact your life a lot. So
no, that's a really good point, Chris. And I'm one of those folks that like to buy my gold, whatever your number is, 5-10% of investable assets, and I'd like to see it go down in value, because that means probably 90% of your portfolio is going up. That's a good thing. I just came back from a conference in Orlando where it was primarily equities folks, right? So this is not typically our world, and we went down there and talked about gold the way we believe you should own it, and everybody should, in our opinion, for wealth insurance. So it's a very tiny portion of your portfolio, 5-10%. It's for the financial crisis that you hope you never have, but it is a store of purchasing power proven for millennia, in a very, very liquid form. So if you have an emergency, you can tap into it, and that's why I think everybody should have it in their portfolio. But I got into a conversation with somebody who just basically said, "Oh, you're the gold guy. No, that's not for me." And I said, "Do you mind if I ask you why?" Because I think it's for everybody, And he said, "Well, I like interest and dividends. Specifically, I like dividends." And I said, "Okay." He said, "Gold doesn't kick off interest and dividends. It just dead weight. It costs money. It doesn't do anything." And I said, "Well," I said, "there are times, and I think we're entering into one right now where, gold can go up considerably. Last bull market, it went up 65 or 650% in 10 years, and silver went up 1,000%. And granted, that's not a dividend, but that's still significant appreciation." He goes, "Yeah, but it doesn't kick off dividends." I'm like, just out of curiosity, are you buying stocks that are kicking off 65 to 100% returns in a year, your dividends?" And he's like, "Well, I just don't know what to say. I like dividends." And he walked away, And to me, I wrote about this in our upcoming newsletter that, that to me is just a perfect indication of the brainwashing from the brokerage houses and the banks. They are very, very effective in their PR.
Yeah, I just have to say, having worked at a major sell-side broker-dealer way back in the day, I mean, they're not even, they don't even understand markets, most of them. They're just asset gatherers. Yeah. Firms. Back in the day when they used to actually take a client's money on their Quotron machine and buy, they don't do that. They just out there to gather assets. They basically have a pitch that they're trained.
More under management, bigger paycheck.
And the thing is, they're all okay as long as the tide is rising, right? But the only thing I'd say from a guy like that, you can't have any interesting dialogue with someone like that. At least if they could come back and speak a little more, a little more knowledgeable, it would be probably enjoyable. I actually feel sorry for his clients, but they should know better. Yeah. Clients should really interview their financial consultants a little bit better. And if a person is really one-dimensional, it's probably best to go find somebody else.
Yeah, we always believe in diversity, that you should always have at least 5 to 10% of your portfolio invested in precious metals. Again, we always get into that question of whether it's precious metal stocks or precious metals actual either bullion or some sort of certificate. I always like to say, well, if you're doing 5 to 10% in gold mining stocks, then that's just still 100% stocks, right?
Yeah.
Well,
Exactly.
and that's right on the head, Matt, because it's an equities allocation. That's not, you're not owning any precious metals.
Yeah.
No, it's not bullion. It's still an operating company, and granted, in the ground is the bullion, but that is that is not a direct precious metals physical position.
Yeah, and I think people have a tendency to get, following the herd. We've seen this with a bunch of the last cycles, during the last bull run in gold, where we went up to 1900. I had people that were complaining that they were 60, 70, 80, 90% in precious metal.
Crazy.
And that I was a joke for not recommending more gold. And I was like, it's like, you understand that there's a point where it's going to turn over. We saw the same thing, let's say with Bitcoin, go back to that currency. At 20,000, we're budgeting their house to 100% of their portfolio crypto. If you get into that herding mentality in anything, you're going to get screwed. So that's the whole point of diversifying. That's the whole point of owning something that's precious metals, owning something that's equities, owning something that's also bonds. So you have all of this exposure.
Do you remember that old saying? Bulls and bears make money, and the hogs get slaughtered.
Yep.
Yeah.
So the people, they get greedy and they go put all the chips on the one. It generally doesn't work out, and it's just smarter to, like you said, take your diversified position, and when something's doing well, say this is why I diversified, but then just don't go sell everything and pile all in.
Yeah.
Maintain the allocation, proper position sizing, be diversified, and like we said earlier, you don't fear the downturns because you're covered.
And if you have the feeling of doing that, that means it's the top.
Yeah, exactly. And I'm sure your Uber driver told you to do it.
Yeah.
So, all right, I got another question here. I think we covered this. Will we ever see an end to the trade war? Anybody want to add anything to that?
I'll add one little little tidbit here. I think one of the things to watch is Singles Day, which is coming up in China, 11/11. That is the largest online shopping day in the world. I know Xi and Trump have I guess pushed back their discussion until sometimes in December, but I think those numbers will be interesting to watch, because last year was $30 billion in one day. There's nothing else in the world that compares to that. This is Prime Day or Black Friday, Cyber Monday, all of that combined into one massive day. And so
We've got a few people there in China, right?
Yeah. And so if those numbers come up soft, that will be I think that'll be a concern, because we've seen a lot of the Chinese stocks are all take hits because of this trade war, even though their exposure to the tariffs or whatever is very limited.
Well, I think that's why they're back at the table. They're feeling the impact. The world is feeling the impact. We're feeling the impact, and that's why they're talking again. I'm certain of it.
Yes.
I will throw one other thing is, and maybe this out of left field about this. Of course, this is a negotiation, right? China has stolen intellectual property. Trump wants to put a stop to it. China doesn't want to stop. China sells a lot more stuff to us than we do to them. So the people in the mainstream media act as if we're the only ones that can get hurt in a trade war. But I think there's another dimension, is that China mostly imports agricultural products from us. China's got a serious problem right now with the swine flu. This is basics. Everyone loves to talk just about technology, and they forget that, people at the end of the day, the most basic thing is eating. Close to 50% of China's hog population has been wiped out. They're the #1 consumer of pork in the world. They're not able to fill that completely by just going to poultry and beef, right? The loss in the pork is just too great. So what people forget is China, of course, isn't going to broadcast this, right? They're always hiding. No one puts on a facade more than the Chinese, right? Especially with everything being so controlled. But they have a serious issue at hand with a creeping problem with food. The food inflation from last year, pork is up over 70%. This is not an affluent country where all these peasants can just, no problem, double their food expense. So the point is, everyone thinks that, I believe because the media is basically, always looking to hurt this administration, is that they act as if like the Chinese are basically in the driver's seat. Now, I think the Chinese have a much bigger problem than the mainstream media lets on. And that if your population really starts to get hurt through food inflation and the ability to feed themselves, that's going to be a much bigger problem for China.
That's the biggest concern for China when you have social unrest. That is their number one fear in a controlled environment of any sort. So,
Also, so talking about hogs, generally what you recognize as the bottom of the pork market is when McDonald's launches the rib sandwich, McRib sandwich. Because there's no,
is a contrary indicator? Is that like?
Because there's no schedule for when it comes out, just when the pork prices bottom, and so the U.S. pork producers all produced a bunch of hogs in anticipation of shipping over to China.
Oh yeah, the inventories are way up in the U.S. You're right, because the farmers are like, great, you're dying, you're going to buy from us, but the Chinese are resistant, right, because of this trade war. But it's like the stalemate. It's like, okay, at some point you're going to give, because how long is the food inflation? How long can your population survive? This stalemate. So it's going to be interesting how it plays out.
Gotcha. Got an interesting question here. I got a couple more questions. Recent survey suggested 2/3 of the Americans feel they're better off or they are not better off financially since President Trump took office. The economy is booming. Why does everybody feel so poor? That's from Ted in New York.
I think that goes back to what we were talking about earlier about the stock market being the indicator of the economy. That maybe isn't something that's shared by everybody. I think that's one thing. I don't think we're dealing with a lot of inflation at the moment. And then I think people get into this habit of social media, sort of envy, following people on Instagram or Facebook, and they're living lavish lifestyles. Even if I watch people on Instagram, and I was like, boy, I would love to live a life like that.
All you got to do is write 7 more newsletters a week, Matt. That's it. That's all you got to do.
Yeah. So I think that's part of what's happening now. It also depends upon what part of the economy, or what sector of the economy this person is, because we have seen some sectors get hit. Steel has been very sluggish after the tariffs were introduced. We saw the steel at over $1,000, but then it's pulled back. The economy has added, 4 million jobs, but I believe the steel sector has only added about 800, which is a very, very small amount. And of course, on the ag side, and a lot of bankruptcies increasing for farmers. So there are sectors of the economy that are booming and red hot. There are others that are struggling because of this trade war. The trade war not being resolved is one of my biggest sort of fears, that the overhangs for this market. Been going on for almost a little over a year now. So
yeah. Okay.
I'll just have to say, I think Matt made a very good point within there. Granted, we know there are certain segments that are struggling somewhat, but that's always happened in the country, right? There was always shifts going around, different regions of the country, because one area is more of a agriculture and one's more minerals or something. But the whole idea of perceptions through social media is enormous, right? This idea that people feel, oh, I'm so much worse off than 10 years ago or such. And I think a lot of it is perceptions, and in a lot of cases, people have way more material than they did 25, 30 years ago, right? There are a lot of people living in homes that are twice as big as people in their same jobs had, similar jobs 30 years ago, right? They're getting leasing new cars every 3 years, where, when I grew up, people buy cars and run them into the ground, 12, 15 years old.
Some of us still do that, Chris.
Yeah, and there's a lot of young people have this, they expect the instant gratification. I mean, they think they're going to be out of college in 2 years, and that they're, they should be living in, a certain lifestyle that a lot of people only 25 years ago thought that that's a lifestyle you achieve by your mid 40s, right? So I think there is a lot of envy. I think there's a lot of distortion out there from disinformation and misinformation that people are exchanging on social media, and people get caught up and buy into it, and then they feel bad.
Yeah, I think that's one of the reasons for the rise of socialism, which is a very strange thing to have taken place in this country. But I think you have some maybe Gen Z and millennials that kind of grew up in that financial crisis and saw kind of what happened to their parents, and then it's still very, very scarred by that, and see the rest of the world, see the stock market, and have, like you said, just a great deal of envy towards what's happening.
I've talked to a few that basically said that just what you said, Matt, that really scarred them. They weren't invested through that, but they saw their parents go through it. They saw them nearly lose their homes or whatever the case, and or lose their homes. And that was kind of a wake-up call. I think part of the issue, I do think as a nation we have. I don't like sweeping generalizations, but I think we're becoming more materialistic. We flat out do not understand the difference between a want and a need. Just because somebody else has it doesn't make it a need. Food is a need, shelter is a need. iPhone, who cares? It's our priorities are a bit distorted. But I think it's going to be tougher for generations to follow here, because I think this increased value, or this illusion of increased value because everything has a higher price tag, is coming home to roost. You've got folks with more than we had growing up at their disposal, better educated, more schooling. I mean, the things they're learning in school, in high school, I did in college, and vice versa. I mean, the curve is really ramping up here, and yet they're making less money than the previous generation.
I have to be the fly. I do have to be the fly in the ointment in the skin. I'll say I have to take one thing. I believe they have more schooling. I don't know if they're better educated.
That's a good point. That's a good point.
There's
a lot more at their disposal, though.
Just going to school,
Yeah.
and taking subject matter that has an agenda behind it that isn't necessarily, that is actually being, you're being brainwashed with, doesn't necessarily have value. Right? It could be detrimental. So I think that's another thing, right? That's a whole other topic, higher education. I mean, it has become such a business right now. It's, it's ludicrous. Even that idea when they said years ago, everyone just has to get a college education because if you have a college education, this is what you make, right? Well, yeah, that's great. But that's because there's a certain amount of jobs that required it. Right? It doesn't mean you just go and those jobs then that we need that many surgeons, right? If you want to boil it down to something simple, right?
Yep.
If everyone became a surgeon, surgeons wouldn't make a very good living, right? So there's a supply demand. So just
in everything.
A degree, we're finding an institution that's willing to give you a degree, no matter how much they have to water down the subject matter. The idea was, that automatically put you in, the high earners, the good earners group. So I think there's a lot of misconceptions, and going back to millennials, a lot of them I think were bred on that, and then they went to school, they came out, and then they're wondering, why their degree and isn't delivering them what they expect.
Where's my payday? I did the work. So now the work starts. So, all right, I got one more question. This gets back to gold. It says, if gold's in a bull market, why can't we get past 1,500? But I think we did like 3-4 times, right?
We've only been in 1,500 a short period of time. I think you want to build a base here for a while, right? I would rather see a base built here for a period of time than just shooting up to 1,700, because I think if we did that, then you'd be in that where Rich was saying, you're probably looking at a good chance of a pullback and a consolidation. So I actually think we moved up smartly, right? We got a nice return. let's as you said, or I said, let's build that base and then prepare for the next solid leg up.
Gotcha, Matt.
Yeah, I definitely agree. I think you're looking at a situation where the next 5% pullback on the Dow or S&P is really going to be a big driver behind gold prices and precious metal prices.
Gotcha. And I'll echo that thought. I mean, the way I see it, if we are in a bull market, and I absolutely believe we are because we broke out, okay, technically and otherwise, emotionally, whatever. Once you're in a bull market, you want it to stair step. You want your new highs to be higher than the previous. You want your new lows to be higher than the previous. And a healthy market is one that corrects like that along the way. So I think by nature, gold buyers are just paranoid. And they see every turnaround as, oh my God, this is the end. I got in too quick. But I embrace it. I don't cower in fear when I see a pullback in gold. I embrace it lovingly because that's my opportunity to buy something cheaper than I probably will be for some time. So, all right, good. You were taking. No, go ahead.
No, I would just say, I mean, and gold investors, precious metals investors, but again, gold as the proxy, always have to keep in mind, you're never going to get the daily affirmation from the mainstream financial media that you're doing the right thing. I mean, you've made your own decision, you've done your own research, you've taken that position, but, tune out the mainstream because they're not the ones that probably helped you make the wise decision to take a position in it. And don't let them,
Don't be guided by them once you're in it.
Scare you out. So yeah, you're in a more lonely position, right? You're not in the asset class that is the focus is to pump up, right? That's the equities market, right? That's where all the cheerleading is for. The metals are all the mainstream is the naysayers. So.
Gotcha. All right. I guess at this point, I don't see any more questions. Go ahead and wrap up. I guess. Matt, I'll put you up first. Just kind of parting thoughts. Anything you want to share? Any way that our listeners can reach?
Sure.
Hear more.
Yeah, to hear more, anything I have to say about cannabis. I also cover oil, natural gas, mining stocks, and gold, as well as cryptocurrencies, cannabis, a whole bunch of small cap tech. You can check out profittrends.com. Profittrends.com. I write several columns there every week, including a weekly video segment called Cannabis Now that goes out on Thursdays, as well as its counterpart Biz Now, which just covers just normal business, just not all of cannabis. And you can also check out Strategic Trends Investor. This is a monthly newsletter that I put out where we cover small cap tech, cutting edge tech, as well as dividend paying stocks. We take a diversified approach to building our portfolio so that we have a foundation of dividend payers. We then have that what we call our fortune hunters. These are miners as well as digital payments companies, etc., that are in that mid cap range that help provide some boost and stability. And then we have Trailblazer portfolio, which is our small cap opportunities, things that we look at for long-term trends. One of the things, which I will say to your viewers right now, one of the biggest trends that no one talks about, and this webinar and everything plays into it, which is nearsightedness. The rate of myopia and nearsightedness is increasing across the globe. More than half.
You can't pin that on us, Matt.
No, I can't. But almost half, more than half of the population will be nearsighted by 2050, and that's because of smartphones and computers. And so those are like these big sweeping plays that we position ourselves for with multiple companies, so with Strategic Trends Investors, as well as our reefer retirement portfolio. Gotcha.
So bottom line is he's the chief trend strategist for the Oxford Club, and basically anything that's trending. So Matt's going to be commenting on virtually every sector out there. I've followed him for years. Great guy, and encourage y'all to do so. Chris, your thoughts?
So I really enjoyed the conversation, Matt. It was great spending the evening with you and chatting with you. I just encourage people, we're a precious metals dealer. But we're a little bit different, right? We do have some products, and our big differentiator is the PMC ounce, the precious metals composite. If you visit our website, which is neptuneglobal.com, you can look at its performance right there on the homepage. Also, we have a nice tool called the PMC calculator, lets you do a simulated trade, so you really see what you're buying, right? It shows you what you own physically. It also slices it by how your investment dollars are allocated to each metal. So it helps really crystallize and so you can understand what you're trading in. And of course, any questions, we encourage people to either give us a call or at least contact us through the website.
Sounds great. And obviously, we're big fans and sellers of the PMC ounce. Give
That's
Asset
right.
Strategies a call, and we can help you as well. I'll add to that one of the two things I suggest people consider right now in this environment is one, the PMC ounce, and I'll emphasize that it's not just for your personal funds, if you will. It's also for IRA funds. So this is something you can put in to your portfolio for retirement as well.
And Rich, I just have to say something in support of ASI, Asset Strategies. What's nice about the PMC ounce, with everything we sell bullion, but all the pricing is published, buy and sell, right? This is, you don't call up and you talk to some like a precious metals dealer where you're negotiating. And that published price, it doesn't matter whether it's through Neptune or through your ASI
Good point. Yeah.
all the same, right? So this way, you stick with who you're comfortable with, who you're working with. You don't have to, you want to open up an account with ASI or you're an existing client of ASI.
You're not paying a penny more.
Advantage to come to us. It's all the same. So.
But important, it's available for personal and IRA funds. It gives you instant diversification, which is one of the things in a very user-friendly format. Anybody that's tried to buy a mix with certain percentages of physical gold, silver, platinum, and palladium, it's difficult. I mean, I've had some clients over the years had resort to buying, 100-ounce sheets of palladium because there was no other way to get a hold of it at the time. You don't have those issues. Let Chris worry about backing it up with physical bullion that's LBMA approved. The rest is nothing to be concerned about. The other thing I would suggest is, I know there's a big trend. We just saw the third quarter gold trends come out from World Gold Council. The number one headline were the incredible influx, new record highs influx of ETF gold. Okay, and it's not just in the U.S. It's global. Okay, on the record, big fan of ETFs. I like the fact that they're bringing people into the market that would never buy physical bullion, and that has an impact on the price, which benefits us physical bullion buyers as well. So I have no problem from that standpoint. I do use it myself. I tend to use physical or precious metals ETFs when I sell something in my brokerage account and I don't know what I want to put the capital to work for next. I'd rather have it in metals and dollars personally. That's my bias, and I like it for that purpose. I do think, though, that if you're looking to buy physical precious metals, that you can do better than buying into a fund whose manager does that through bullion banks at very large quantities to match investor demand. Another product out there aside from the PMC ounce with the instant diversification, I like the Perth Mint Depository Distributor online. Very low fees, gold, silver, platinum available. When you analyze the fees for unallocated metal there, you're at or better, in my opinion, than ETF costs. And it's so another thing to consider. In both cases, buy the dips, and guess what? We're in one right now. So I thank both of our hosts, Chris. Always a pleasure to be working with you. I love your insights, and Matt, thank you for taking the time. I know you just got back from New Orleans last night. He's answering on the plane saying, "Yeah, I'm good for tomorrow. I'll see you at the test connect." So I really appreciate you making the effort to be with us, and I know our listeners benefited.
Hey, anytime.
that's it for this quarter's edition of On the Move. Again, thank you for joining us, and for all you that listen, we'll be putting together the video and sending it out to you so you can go back and at your leisure and tap into what we said and fact check us. Have a great night. Thank you all.
Take care.